This is probably one of the best signals you're going to get on a macro scale here for a new all-time high coming very soon. The strength in the traditional markets before we would see a push or a big bull market start for BTC. Basically, the retail top start to take over. We know that there's already a low in BTC and it is putting in a accumulation range, a consolidation range, and we're seeing the effects also in the S&P and the NASDAQ. So this has essentially met three of our major flipping criteria. The S&P 500, technically it met them last month, but it's nicer to see it break significant swing tops as well. So we're looking here for three key signals. We have the logarithmic downtrend line. The S&P 500 has broken that. It broke it in January of 2023, nice close above. It then came back and retested that line in March during the banking crisis, and the market is now pushed away very strongly from that low, currently up about 13% since that low at a top of nearly 14%. So it's broken the logarithmic downtrend. It's come back and tested it. That's a great thing as well. It's closing above it now. The next thing, it's closed above the 50% level, 4,157 points. It closed above it in April, but we hadn't met the other criteria yet, breaking monthly swing tops. In May, it broke the monthly swing top, but closed underneath it, but it closed above the 50%. So it was in that transitional, uncertain period, whether we're going to go up, down, sideways, what's going to happen here. The market was still trying to decide. And as you remember, for that 2-month period, things were pretty boring. It wasn't really going anywhere. A couple of a percent to the downside or 0.5%. Bears were getting excited, 0.5%, 1% to the upside. I was getting excited. Bull markets, starting to push higher again. But this time in June, we've seen a clean break of the monthly tops and the monthly swing tops. Two different things there. You've got monthly tops, so the top prices, but then also the swing top. And that's what this yellow line is here. It is the TIA Gann swing indicator. That, of course, is in the video description down here as well. This helps you very, very quickly identify key resistance and support levels in the market and shows you where safe levels to put stops are in the market. Not just anywhere willy-nilly or percentages away. These are key areas in the market that hold the market up, and there are key pivot points for the short side and the long side. Back to the three signals. So condition 2 was met. We had closes above the 50% level. Now condition 3 was a break of the monthly swing tops. Here is a monthly swing top. Last month, we had another monthly swing top put in, and the big one here is the August swing top. That's the one I want to see the market break. So far, we have broken it. What we need in the next 3 weeks is a nice close above that level. But since we've broken it, it's basically been met. The bull market signals are there. This is very, very difficult to comprehend if you're on the bearish side of the market, because, of course, the bearish side is expecting a collapse, is expecting lower prices in March and October. And they're saying, just wait, just wait, just wait, just wait till the second half of the year. That was the same thing that was said for this half of 2023. It was the same thing that was said for the second half of 2022. But I'm going to show you some massive data that's coming up in the next 3 weeks that shows that the bull market is back on. Now, looking at the NASDAQ, we've also seen a very strong close to the week. One of the highest closes we have seen since March of 2022. We are up nearly 42% from the low. This is almost starting to sound like an altcoin. There is so many gains to be had to the upside here in the tech sector. Of course, there are fears that the tech is going to get a massive correction, or in the case, maybe a massive collapse that takes out new lows. But we've also met the criteria, those 3 criteria for the bull market to begin. The lows are in, of course, for October. We've broken the log downtrend. We have broken the 50% level. We have broken the monthly swing tops. We throw it onto a monthly chart here. So you can see that it's happening the same. There is more push to the upside. Sure, there are a few stocks that are pushing this up. And yes, things are getting overheated. But because we had such strong shorting at the bottom, which of course is the wrong time, potentially this move has further to go. I'm not saying that we won't get a correction. We will definitely get a correction. That always happens. But because there was so much shorting, so many institutions, so many speculators saying the market's going to go down, yet it went up, they eventually have to cover their position and start to buy back to cover their position, which then causes the market to go higher than it should be. So eventually we'll get a bit of a level of resistance and a correction. Nonetheless, we continue to track the significant lows in the market. And so far, the NASDAQ has also met all of that criteria. It is up now 42%. The VIX also pushing to newer lows. Yes, eventually the VIX rolls over and we get a low in the S&P. So this is what these spikes are. These are all significant lows in the S&P. But as you can see, if this market is trending down like this, lower lows, lower highs, this is a bull market. That's exactly what we have seen over this entire period. There is your cycle low in October. Here are your lower lows. And now we've even squeezed even further. So we're going to get a correction in the S&P, meaning a pullback in prices, a move down. But overall, this is what happens for long periods of time on the VIX. Very long periods of downtrends, which are bull markets in the S&P, in the NASDAQ, etc. Not necessarily Bitcoin, but altcoins. These are the links in the top of the video description. Click that, subscribe to the newsletter. You'll get notified when that is being released. The 6 monthly signal here. Now, this was brought up when I was chatting with Eric Crown, so a good friend of mine, also has a YouTube channel. Go and check his stuff out. Also on Twitter. Looking at the 6 monthly chart, and we've got 3 weeks to go in that. We're getting another high close on the 6 monthly chart. 6 months, okay? A massive signal here. And so that led me to take a look back in history over 120 years. And I thought, if we have a green 6 months, how many times in history has a green 6 months failed from a low? Has it failed to make a new top? And I went back to 120 years here looking at the data. So I'm going to go through this quickly because I know my videos can get super long. And essentially, we can go all the way back here with the data for the Dow Jones, all the way back to the 1890s. Okay, so it's a very long time ago. Different era. There wasn't as much money printing. There wasn't even money printing back then. But nonetheless, there is still some great data to see. This is your 1920s, roaring 20s. Okay, there was a collapse here. Red 6 month after red 6 month. There were no green 6 monthly periods in here. Finally got the green 6 months. Markets up, no new low was formed. All right, so I'm picking out the areas here just to save time, but you can go back and do the data, check the data yourself. Here is the push to round about the same highs, but we had a green 6 month, a red, a green, red, red, green, red. The lowest this went in 1910 was 3% from the current low. So I'm picking out the times here that the bears actually won this fight. This was before the First World War. Think about that. That was before the First World War, and it went 3% lower than the previous low. Then green months occurred. Here we go. Roaring 20s, Great Depression, got green months, got green 6 monthly bars or candles. Market is up from that point. No new low formed. Green 6 months here from this first little crash. There was no new high yet, and it's still above those lows. Nonetheless, let's take that data into consideration. It went below that previous low by 5%. So it doesn't technically count because we haven't hit a new all-time high. Nonetheless, I want to take that in because I want to give some bias to the bear side here. There is the possibility of that 5% going lower. Of course, I don't think that's going to happen based on the probabilities, but nonetheless, there it is. So far, you got before World War I, 3% lower than the current low. And here in the 40s, during World War II, 5%. If you want to take those odds and you think World War III is happening right now, by all means, maybe you'll get 3 to 5% lower than the current low for the S&P, for the Dow Jones, etc. Okay, moving forward, here we are in the 60s. We had a 14.7%, call it 15%, but this market was below the previous top. So we had a green 6 months, tried to climb, double top there, below the top there. So it didn't necessarily technically hit above the top. Nonetheless, I want to give it to the bears. So we have an understanding here. There's 15% below that low. Move to the upside. New all-time high. We've got some greens here. We've got a new high. Collapse. Reds. Greens occurred. No new lows. Fantastic. Now we have to fast forward all the way through to where we currently are, or into the 2000s. Here was one green 6 month period, and the rest were red. But that happened right at the beginning of the move. And the next 6 month period was red. So a slight green of 3% and then reds. Didn't happen again in the GFC. That's what that is. We had a green 6 month, markets up from that point. Fast forward to today. Now, what have we got here? We got a green 6-month period. We've already seen that. Nice solid up period of 7%. And where we're currently set is 2.2% up. So potentially our second green 6-monthly candle, which will close in about 3 weeks' time. Emphasize the point here that we have these green 6-monthly candles, market makes new all-time high. Green 6-monthly candles, market makes new all-time high. Green 6-monthly candles, market makes new all-time high. Is this time different? If you want to bet against 100 years of data, by all means, go ahead. I don't think we're in a different time to what we were. There is plenty of similarities throughout history. Things will eventually be different in the future, but they're going to rhyme. And right now we've got 2 green 6-monthly candles happening. This is probably one of the best signals you're going to get on a macro scale here for a new all-time high coming very soon or in the next few years.